Thursday, the 13th of February 2025, and the US markets have just opened. I'm going to be waiting for my mechanical setups as per usual. The first one that interests me for today is going to be the first 15-minute bar close in the Nasdaq. So we're breaking above London session here. I'm going to be interested in the sizing of this candle. I would prefer for this candle to be max 100 points, but I'll still take it if it's a bit higher. Just like we did yesterday. You can see it here. This is the first 15-minute bar from yesterday. And the green square is London session, the green square is New York session. The yellow is London session and blue is Asia session. So you can see here, I went long at the break of the first 15-minute bar to the upside. I didn't move my stop. Stop was placed below the trigger candle. You can actually see it here. I'll just activate the trade history here. So I went long here. The stop was right below the opening bar, and I exited after holding it for a few hours. I thought this was a good place to exit because obviously we're getting into this supply zone and it was getting late, so I didn't want to let it run into the close. I think it was a good close, a good execution by me. We've completed the first 5-minute bars. I'm not going to take the second 5-minute bar entry in the Dow today. It's been slowing down a bit lately, so I will reassess for now. If it works today, I might take it again tomorrow, but let's see. So I'll wait for the completion of the first 15-minute bar in the Nasdaq, and for the Dow, I will look at either the range between the second 5-minute bar and fifth 5-minute bar, or I will simply take the break of the second 15-minute candle. Other entries, I will be interested in the second 15-minute bar in the DAX and the fifth 5-minute bar in the S&P 500, SPX, right here. So what I do is I track specific entries off specific candles in each of these indices and gold. And when one of the entries performs well over time, I start taking it mechanically with a buy order above and sell order below, and then I just follow the first fill. I never enter twice on the same entry on the same day. So I just let the market take me where it wants to go, and it usually works well. So I'll just pause you now, and I'll bring you back when we're closer to placing the orders, or after I've placed orders and waiting to get a fill. So we're still 6 minutes away from completing the first 15-minute bar. Generally, when we wick above a previous range and close back into the range, that is going to be a sell signal. However, let me just delete the previous orders. We've generally been in an uptrend in the Nasdaq as well. So this isn't as good of a setup as the one in the DAX was in the morning, because that in the DAX was in the direction of the overall trend on the daily time frame and weekly time frame. But this can still work, though I'm not going to take it, simply because my mechanical entry is just more valuable right now. It's just better right now. So currently the candle ends at 860 and starts at 746. So it's still quite a big candle. However, I am going to I'm going to take it with decent sizing here. I mean, similar to yesterday, like $0.50 a point. This is one of my better entries, but because the trigger bar is so large and I'm forced to place the stop at the other extremity, that's going to be quite a large stop, so I can't really go much higher. I want to risk like $70 on the entry at most, because even if it's been good, it can still fail, obviously, and I don't want to lose more than 70, perhaps maximum $80 on it. So with this sizing plus the cushions, we're gonna get close to that amount. Unfortunately, had this bar been shorter, it would have allowed us to go higher on the sizing. So 3 minutes left. I'll just pause you until we get there. So we are completing the first 15-minute bar in a few seconds. I'm just placing my orders. I will use a 5 to 6 point cushion from the extremities, so plus 5 to 6 here. And the same for the short order. So 746, we're gonna go to 740 something. Let's go like that. So now we basically have a range, and we are long above it and short below it. And we just let price decide where it goes. And what I do is just I research these moments in time, basically, these candles on these time frames, and see if price usually starts moving directionally off that particular bar. And when I discover that it does consistently over time, I start taking that entry and I track everything in a spreadsheet. And I have a system where I rate the entries and I take the best ones. And when they start underperforming, their rating decreases, so I don't take them anymore, and so on. So just a simple explanation for you to better understand. But we're now going to wait for the first 15-minute bar to complete. And then we'll see in the Dow. I'm going to wait for the completion of the 5-minute candle in both the SPX and the Dow. And I will bracket that candle in SPX as well. And for the Dow, I might bracket the range formed between candle number 2 and candle number 5 on the 5-minute chart. That is also an entry. That is working fine right now. But that will be quite close to the completion of the second 15-minute bar, which is also an entry that works. So I might just take that instead, but let's see, I will decide when we get there. I will have no entries for gold for this session. I had a few in the morning, they didn't work, and I have nothing that's good enough for the US session, nothing that is as strong as I need it to be. Normally I would be considering the completion of the second 15-minute bar, and I would place orders above and below that, but it doesn't have that high of a rating right now. After a few bad days, actually 3 bad days in a row. It used to be on my list, but right now it's basically taking a break. And I'm waiting for a fill here and just waiting and letting price action do its thing. So with this strategy, the big pro is that I don't really care that much about market structure. I don't really care that much about daily bias. I don't really try to anticipate where price will go. I just enter mechanically and let price decide for itself. And I just try to find a pattern in time where price goes in a direction. So I just place my orders there and hope to catch a directional move. That is basically all I'm doing. So this strategy works well when you're in a trending market, of course, if you just stay in a range, stuck in a range, then it's not going to be good because you are selling at the lows and buying at the highs. So now we are in a market where we generally break out or break down. When that will change, my methods will adapt as well. And I think that's the key to successful trading. There's no one method that just works forever, non-stop, every day. You just have to be adaptable. But all my entries always will be mechanical. So when we get to a point where, let's say, we're just not in a market that likes to break out or break down, then you will just see me sell when we get to a key resistance level and buy when we get to a key support level. So I'm just going to take advantage of a ranging market. But now we're in a streaking market generally. So these breakout and breakdown mechanical entries work pretty well. So still waiting here. A bit more to go until we complete the fifth 5-minute candle. It's just beginning now. So 5 minutes, I'll bring you back, or I'll bring you back earlier if we get a fill. Quite slow price action here, must be said. We've had jobless claims and core PPI earlier, which came in positive for the dollar. So PPI increased a bit and jobless claims decreased a bit. Generally, this isn't extremely good news for stocks and indices. But we're kind of subdued here. So we're going to complete the fifth 5-minute bars. So let me just see here quickly in the SPX. Gonna go higher sizing because the bar is quite low here. Using the cushion, about 1 point. I think I might have gone higher here. Yeah. Okay, so filled in, deleting the short order, placing this here, keeping the cushion for the stop as well. So I'm risking $60. And I'm gonna target, let's see, at least 13 points. Let's see what that looks like. So that looks like this. So I'm risking 60 to make 104. Now, why am I choosing 13 points, you ask? It's because I track down how much I make in points on every single trigger, how much I win or lose. So on this trigger, the last 14 trading days were plus 10, 15, 29, 11, 20, 15, 32, 35, 15. And these are just the winning numbers. When it didn't work, I lost 6, 5, 17, 10, and 12. So by looking at the numbers, the positive numbers, I can sort of figure out a range of points that is expected. I generally go a bit lower than the average. So I've seen 20 points a few times and even 30 points a few times, but I'm not going to go that high, especially since it does feel like we're a bit subdued today. If you look at ATR here, let me just make this smaller. If we compare ATR, it's at 7 now. Yesterday at the open it was 9. A few days ago it was 6. So this is comparable. Obviously yesterday we had CPI news, so ATR was higher. So I think this is fine. Looking at a higher time frame here, we are getting into some resistance, but I think if you look at the hourly chart here, this TP makes sense because it's just above all these wicks here. So it's supported by both what we've recently made on this move and by the structure. I think going further up is possible, but I think it's a bit ambitious, so I'm just gonna be a bit cautious and target just 13 points. And here in the Dow, I'm a bit late with placing my orders, but we haven't broken this range. So the range formed by candle 2 to 5. So it's 424 to 330. So it's like a 100-point range as well. And here I'm just gonna risk less. Let me just place the orders here. So I've placed the orders around a 6-point cushion in the Dow from the extremities. So it's 329. I've placed my order at like 323. And the other extremity is 422. Placed it at like 429, so maybe a bit higher here, but that's fine. And this also pretty much coincides with the second 15-minute bar. But this way, the sell order is below the wick of the opening bar as well, because the difference isn't that big. But I think this is just a safer entry. And we have completed the second 15-minute bar in the DAX. It's a 40-point bar. And the sell order would be here. Like 2 to 3. And we would be getting filled here. I had to do the order manually here and just enter because we went above too much while I was talking. So 39, our entry should be at like 42. So we got 45, a bit of a higher entry than I would have liked, but that's fine. There's an extra challenge and also recording the session and explaining what I'm doing while all of this is happening. So I'm risking 61. This is fine because this is supposed to be a higher sized entry. It's one of the better ones for today. And when I mean better ones, I mean statistically, it has a higher chance of succeeding. So last days where this worked, we made 93 points, 46, 27, 150, 60, 35. So quite random numbers between like 30 and 100. I think going for like 45 to 50 points is probably enough. This would be 45. Let's go to 50, 51. Yesterday, this exploded above London session and kept going. I actually wanted to move TP higher, but the market moved so fast that I missed it. And I just got stopped out by TP. I'm going to keep an eye on it in case it does the same, but I do think risking 61 to get 64 is fine here. I think this is a very doable target, but let's see. We've had quite a big opening in the Nasdaq, covered a lot of place. Now, okay, so it is happening. We are pushing forward. We might just get a TP and the SPX here. Let me just switch to live PNL. We could also get a bit unlucky. Gonna give it a chance here. It's $144 entry. I mean, take profit. We did get filled in the Nasdaq, so we just shot up here, moved up with strength, and I'm going to place the stop at the lows here. We almost hit TP and SPX and retraced a bit. Hopefully we don't get unlucky. We could get unlucky here. We were very close to hit. And we got filled long in the Dow as well. Okay, and for the Dow, I'm going to target like 100 points. So risking 48 to make 45, I think that's fine. And I think we've gotten a bit unlucky here. That almost hit. And now we're retracing quite strongly, which sucks. But what can we do? We missed it for less than 1 point. But yeah, that's fine. You have to be prepared for stuff like that. It will happen sometimes, and I know it's tough. My finger was on the button and I was ready to perhaps close it early, but I generally don't like to do that when price is so volatile. You can easily get filled on a much lower price. It has happened to me. So I do like to use TPs and just let them hit. So with that in mind, I'll just let this play out, I guess. If we just fully reverse here, that's going to be a huge swing of almost like $150, but that can happen. So just gotta keep being patient. I think we can easily just carry on going forward. Obviously, we're at previous day high here. We just went above, so there's always going to be some selling pressure, some people trying to catch a top here. Trying to sell doesn't mean that we necessarily have to sell here. So I'll let things run. And in the Nasdaq, we just got filled and then retraced. So yeah, perhaps a bit unlucky, especially if we fully reverse here. This will be a very unlucky fill. But we've followed our rules and our preparation, so I'm not gonna complain too much about it because we've done everything right here. So just letting it play out and hoping that price carries on in this direction. And if not, then we just lose a few trades. It's something that we are totally prepared to do. Next entry for me will be break of the third 15-minute bar in the Dow. So for the Dow, a lot of opening bars are working really well right now for this strategy. So I just take them in succession, and in this case I'm not going to take it to the downside unless, let's say, it closes near the lows and then stops me out, and then I can place both buy and sell orders above and below the third 15-minute bar. But let's see, definitely a bit unlucky here. I just left it alone, hoping it would just hit, to not have slippage when I closed it manually, because I knew we would probably get some sort of reaction here, considering we moved so fast. But yeah, that happens. I'll let things run here. It's been a good day so far. It would be unfortunate to lose so much here on an unlucky fill and then on such a hard reversal here, but that will happen sometimes, and we need to be prepared for that and be completely okay with it when it happens, because On some days it will happen. So I'll just pause you here and observe price action, and we'll see what happens. So there's a few hard decisions to make here, and I'm going to run you through them. Now these are all three of them, and I mean the SPX, the NASDAQ, and the DAX trades. They are on setups that have been working the best lately, pretty much. So pretty much they are the best three setups. Now you see the DAX on the 15-minute here raiding the top of the range and then closing back into the range. This is similar to this morning at the opposite side, and this theoretically is a short setup, but it is a bit invalidated by the fact that we've been rallying for so long. So when you take it counter trend, and when I mean trend, I mean a higher time frame trend, but when you take it counter a higher time frame trend, it's not as strong. Now I'm risking 61 here, which is quite a big amount, and the question is, do I close this early or do I let it run? The problem here is that with this formation, it is very likely that we try to at least match the low of this second 15-minute bar. However, because this entry has been so strong, I owe it to let it run and not touch the stop loss. It might look scary, it might look like it's very likely I'll get stopped out, and I might very well be stopped out, and you might look at it afterwards and say, well, you should have probably exited. But I don't think that is the case. I think that because this is one of the best entries right now, regardless of how scary the structure looks, or we're at resistance, whatever, I think I should see it through. And the SPX has returned now. I'm just going to close it there. It's perhaps a bit unnecessary, but with so much exposure to the upside and with 3 other long positions, I think it's okay to take $10 less here of the 104. I got 94. And just to be a bit proactive, I still have an open trade basically in a very similar index. So if this runs, I'm still exposed to the upside. And I just realized I haven't placed a take profit for the NASDAQ. So the past few entries on the NASDAQ on this strategy, they've returned 110, 60, 70, 80, 45, 120, 60, 160, 100 again, 60 again, 90. So I would say that somewhere around 80 would be like an average. So let's see what 80 points looks like here. So 80 points is kind of low considering where our stop is. We're risking 64 to make just 40. So that's a bit unfortunate. So if we push this up to 100 points, which is also within our range, we're gonna get like a 60 to 50 trade, which is a bit better. I will look to be perhaps a bit more active here with the stop loss. I think it's okay to raise it just a bit, simply because if we go back into London range, and obviously London range starts here, if we go again into London range and close, we're probably getting stopped out anyway, so I'm just saving a bit more money and increasing our R&R. So now it's closer to our 1-to-1. And we would have hit TP here, but like I said, I wasn't going to move TP, and for just $10 extra, I think that was a fine decision. I will let these run now. The targets aren't really that ambitious, but I think, anything can happen, of course. quite a bit up on the day. It would be nice to have a strong day here where most of our entries work. But let's see, I am a bit surprised to see the S&P 500 and Nasdaq being so strong, but DAX all of a sudden be a bit subdued. We did have some news in Germany today. We had CPI, which came in as expected. We also had some bad news coming out of Munich, I think. There was some sort of a terrorist attack there with a car in traffic, so perhaps that is also having an effect here. I will, however, like I said, let this run because I owe it to this entry, because it has been so good that I do think it's a mistake to close it, even though the structure looks scary. So let's see what happens. This is why I've decided to just close this, because now if everything just reverses, and obviously since we were longing for indices and they're kind of going together right now, if we have a reversal, they would likely all reverse. So this way we're just a bit safer. But let's see. It's looking pretty good in the Nasdaq so far. Just the DAX looks particularly weak. And I mean, the Dow isn't looking great either, but at least we're in profit for now and we'll see what happens. But my last entry for the day would have been the break of the fourth 15-minute bar in the SPX. This would have been a normal sized trade, but this is now the fourth 15-minute bar here, and let's see, 12 points. It's a decently sized bar, but we'll see where it closes. I might still take it. So I'll just be patient here and bring you back when we're closer to another entry, or we're closer to a TP or a stop loss. So the fourth 15-minute bar has completed in the SPX, and I've placed buy orders above and below, smaller size this time, which is actually, it's going to be a normal size trade of risking around $50. But the bar is obviously bigger here, so I can go with a sizing of 8. And this is going to be the last entry for today, I think. Now if it triggers long, you might say, well, you targeted just 13 points and got out, and now it's going to trigger in the same direction and you're going to be filled for a worse price. Well, yeah, but it's a different entry. So this is why I like this strategy. It just takes me, it just fills me in a direction based on objective research and on market moving where it wants to go. And my research is just showing that there's a higher likelihood that price continues in that direction. So I have no problem in buying at a higher price if I'm confident that price can move higher. So this just forces you basically to go into positions that you might not want to go. And it forces you to do so objectively, based on data and just market movement. So that is why I have no problem buying at resistance. And usually you will see me buy at resistance and then price goes in my favor. And that's a trade I wouldn't have taken normally without a mechanical entry. So that is the power and beauty of these entries. And for this particular one, I think I'll also target like 13 points. And that's going to be it. So now we just let things run. gonna just wait for a fill here. I think we are gonna get filled long, obviously. And I'm just gonna place the stop here. We'll delete the short order. And we'll just let things run. For most of the trading session. And there it is. We've been filled. Placing this right below, risking 56, just a bit above. And going to 13. So risking 56 to make like 53. That's fine. Or actually, if you wanna be completely accurate, I wanted to just risk like 50 maximum. I'll take a bit further off here. And now I'm risking 49 plus the little bit I was lost here, so I'm risking exactly 50 now. 50 to make 46. That's nice. That's okay. Okay, so I have my trades open. These are all going to be the last trades unless I see some strong price action all of a sudden. Like, I might consider adding if I see price starting to move really strongly here and close above here in the Dow, let's say. Perhaps I would add, but I'm just gonna let things run, I think. And or another add-on possibly would be here on the 5 minute. Looking at ATR here, ATR is 8. Say we gain 8 points in the next 5 minutes and close strongly on the 5 minute bar. I might actually add. So we would have to go like 91, which is kind of unlikely. So with that being said, I'll just let things run their course here. Whatever happens, happens. All of the entries that I have, yes, they're all long positions, which perhaps, you know, can give you a bit of anxiety, because maybe you don't want to be taking so many trades in one direction, but at the same time, they're all based on cold hard research. They're objective entries, and I am supposed to let them run. The strategy proves that, and the strategy and the research proves that I'm supposed to let them run. So whatever I feel uncomfortable perhaps a bit to have 4 long positions, because if the market reverses, I'll likely lose all of them. But I'll just let them run and give them a chance to hit, because I should also think of the scenario where they all hit. You know, when we're in such a position, or generally when we're in the markets, we might feel inclined to imagine what happens when everything goes against us. So it's easier to imagine everything reversing and you getting stopped out of the 4 trades. And that would be quite a huge swing. But you should also think about the scenario where they all hit. That would be pretty cool as well, right? So I'll leave you with that, and I'm gonna take a short break. Everything is fine here, set up with stops and TPs, and I'm gonna return and I'll bring you back when we have something more clear, or we're closer to getting stopped out, closer to a TP. So just getting back here, and I've decided to close the Nasdaq as well. Let it try to touch the TP for a few moments, but again, just being a bit more proactive here and managing these positions. So where it was TP, I closed it like 10 points earlier. That's fine. It was starting to retrace a bit, and I just didn't want to let everything have the chance to retrace here. So I think I can move this even further up now. I'm just going to just 40 to make 46 here. And I still have 3 open trades, so it's not like I don't have exposure left, but yeah, I decided to be just a bit more cautious. Just because they are 4 positions, and yeah, it's time to protect capital a bit, I think, as we wind down on the day. So let's see, we can still reverse here. I lose quite a bit, but at least now we're a bit safer. So once again, this first 15-minute bar in the Nasdaq works really well. I'm just sad that I can't really take it with a higher sizing when the opening bar is this big. That's my only complaint, really. So now just letting everything else run. I probably won't be closing anything early anymore. I think I've closed quite a few manually, which I don't usually do. Obviously, I did it for a good reason, I think, but I'm gonna let the others run, and it's gonna be either a nice green TP or a red stop loss. I mean, unless we get deep into the session and we're just hanging around here, nothing happens, then I'm obviously just gonna close everything, but I'll give them a chance to do a proper TP run here. So I'll pause you again and bring you back. Bringing you back here, market has turned in our direction here. Just by being patient, we might be getting a TP any moment now. Trying not to jinx it. But yeah, a good example of just being patient and not react. Things weren't looking that great. At one point, we were looking like possibly we would be reversing and everything. Obviously, we're at all-time highs here, so there's no structure to look towards to the left. But yeah, just letting everything play out here. Would have liked to show you a live TP here, but it seems like the market just wants to go close to it today and not really touch it in the US session. But I'll be patient here for a bit. Because I don't think we would have touched it here either. I think it was right of me to just close it. We haven't really returned to this area. And my TP for this was here. So a bit weird, a bit unlucky perhaps. But usually my levels are quite good. Like I said, I'm using my research and both the structure to decide on targets and stops. So a lot of times you will see them just hold or just miss. Because I do try to maximize everything, obviously. But you see how this reversal formation here was invalidated. This is why This particular setup is one I only have full faith in when it's in the overall trend of the market. So in the morning, I was confident in going long here. When this closed back into the range here, and it's for the same reason that I wasn't confident here when it raided the top end of London range and closed. Normally this is a short trigger, but not when we've been rallying for so long. That makes it weaker. So I guess we're not getting TP'd today. Come on, last chance. Let's see. I do think this can go higher here, of course. I'm just being a bit silly here, but there we go. Okay, so another TP, that's nice. This is turning out to be a very nice day. And it's becoming such a nice day because I didn't decide to be afraid with my profits. And this is also something that would happen to me in the past. And I'm sure if you're watching this, and if you're struggling, you're perhaps struggling with this as well. You're in profit and you're afraid to lose that profit on the day, so you decide, oh, I'll just close early, I'll just step away. You know, I can't lose money if I don't risk, and I can just close early and take my profits and finish the day at 10,500, whatever it was. But instead, I just trusted my entries. And on some days, everything will just work. Now, obviously, I'm still in two positions here. We could still reverse. But I think at this point, it's completely okay to just go back to break even. So I'm just letting everything run. And in case we do get a reversal, we just finish here at 10.610. And we've been patient, we let the trades run, we weren't afraid of reversals, and we allowed ourselves to make more money, which is the goal. And we're that much closer to passing the challenge. Obviously, I'm not gonna get euphoric or anything too early. Any type of emotion is generally bad for you. So just treat it as a good day, because it is. Take the important lessons out of it, both the good and the bad. See where you would have been able to do things better, if that's the case. Analyze both winners and losers, and if you think you've done something right or wrong, understand what you did, both right and wrong, and move on. So I just never really let emotions interfere. I'm obviously happy that I've had a good day here, but at the same time, it's just another trading day, and I just need to keep being consistent, because some days are going to be tough and I need to lose the minimum on those days. And on days where everything works, I need to fight the urge to get up from the computer earlier just because I'm up and I'm afraid to lose, and to keep my trades open if my strategy calls for them to be open, and keep taking every entry even if I'm afraid to lose money because I'm up and I don't want to give away anything for my profits. That's normal to feel like that, but I think what this session showed is that I could have easily stepped away and not taken this trade, not taken this trade perhaps, or closed these trades early when we were hanging around here and it was looking like we might reverse. So I think that is a very important lesson. And now I'll stop yapping and I'll pause you again and wait for TPs to hit, or if we reverse here, we reverse and that's it. But I'll pause you for now and we'll see what happens. And it does look like we did finally have a reversal here. Now, if you're saying, why didn't I close? I could have said that earlier and I would have been lower on the account. So I just let my trades run and I'm very happy with the outcome of the day, even if I get stopped out here. Obviously, I see the double top here, but we could easily just have continued. Same thing goes for the SPX. You could also say that maybe I shouldn't have moved the stop loss, but I was quite a bit in profit and we were fairly close to TP. So I think it's fine to just mitigate a bit of the risk there and just lose less when you get a full reversal. We're very nicely up on the day, so I'm very happy to end the video here. I do expect this to get hit as well. I'm not going to stick around. I'll just post this video now, and I think a lot of valuable lessons in today's video. Very positive day, but the work continues, the challenge continues, and we need to do this every single day and do the best that we can and teach ourselves good habits, and things will sort themselves out and you will become a profitable trader if you manage to set emotions aside and follow your plan diligently, regardless if you do bad or you do good, you have a good day or you have a bad day. You need to keep taking your entries and not close trades early and hold off. And so with that being said, thanks for watching. Please like the video, subscribe to the channel if you enjoy this type of content. I am showing videos daily, live execution, explaining all of my strategies. You can easily follow and understand, even if the video isn't live. You can follow along and apply some of these entries yourself for the days that follow. So for example, I'm obviously going to take the first 15-minute bar break in the NASDAQ tomorrow in the US Open. I'm obviously going to take the fifth 5-minute bar in the SPX. I'm obviously still going to take the second 15-minute bar break in the DAX. And for the European session, I'm obviously going to keep taking the entries that worked well today. So I'm going to take the first 15-minute bar in the Dow, which was this one today. I'm obviously going to bracket that with a buy order above and a sell order below. And I might not take, for example, the first 5-minute bar in the UK 100, which hasn't worked that well in the past few sessions. But I'm definitely going to take the Dow. And I'm probably going to take the second 15-minute bar in the UK 100 as well. It worked today as well. So no, I'm 100% going to take this. I didn't remember exactly if it worked earlier today. I'm getting a bit tired. So yeah, I'm definitely going to take the second 15-minute bar in the UK 100 tomorrow, and all of the other entries that I've just mentioned. So just by following the videos, you can easily understand what I'm doing and place some of the trades yourself. And you'll also get to see my live execution after the fact. I don't really like the idea of live trading for now. I'll consider it in the future, but for now, I'll just do things like this, and hopefully you learn a thing or two. And I will see you tomorrow for the European session. Thanks for watching. Goodbye.